Hello and welcome to another video. In today's video, I'm going to show you a profitable trading strategy using Bollinger Bands. Now, I'm sure you've all seen Bollinger Bands on your charts, but if you haven't, then I've made a pretty terrible drawing of them on the whiteboard here that we're going to go through, and we'll also see them over on the computer, see how they're actually properly drawn. So they're pretty simple. It's just an indicator. Most charting packages has it. Just click on them and add them to your charts. I believe the most difficult part of trading is actually having the trading strategy itself, but the trading strategy which has an edge, which means in the long run, after a large enough sample of trades, it does actually make money. And that's why I enjoy doing these videos for you, these strategy videos, because it gives you a chance to see what a proper strategy with a decent edge actually looks like. And the one I'm going to talk about today is a strategy that trades pound-dollar and on a 30-minute chart. So what we do first is have a look at the whiteboard, then I'll take you over to the computer where I'll show you the full backtest report, and I'm going to show you an improvement as well. The strategy uses one simple rule to enter and exit the trade, and that's using the Bollinger Bands, and I'll show you exactly how to use those. In my own personal strategies, I don't use a lot of indicators, as some of you might know. I typically use time-based or price levels, but those sort of strategies that I trade, they're automated. So once I've actually developed them and programmed them, then I let the machine take the trades for me. I don't have to sit there and watch for the trades to come along. But I know a lot of you don't have automated software. A lot of you don't do any programming. So that's why I like to, every now and then, develop these sorts of strategies with indicators, because indicators can be a great way for you sitting at the chart and watching for your trades. So that's why I like doing these indicator-based strategies for you. And some of you may have seen a recent video I've done using MACD or MACD. If you haven't, then I'll leave a link to that video so that you can go and watch that one if you like to use MACD as well. Let's first get straight into the strategy on the board where I'll show you exactly how to enter and exit. Then we'll go over to the computer where I'll show you it on the charts, and I'll show you the backtest report with over 11 years worth of trades, 11 years worth of data. I know some of you appreciate that I show you everything. I don't just give you a strategy, hand you a strategy and say, there you go and trade this, because you don't know whether it works or not. If ever I give you a strategy, I'll show you the full backtest report so you know whether it works or whether it doesn't work. And you don't often find a lot of others doing that. Or if they do it, they do it on a very small sample of data, or they do it incorrectly. Okay, so we have our chart. I mentioned it's pound-dollar on a 30-minute chart, and apply the Bollinger Bands to the chart and the standard settings. What we're looking for is, I've marked here an S, this is for a sell or a short sell, and a B down here, hope you can see that, for a buy. For a short sell setup, I mentioned it's the Bollinger Band fake-out strategy, I like to call it, because what we can see here is the bar's moving up into strength, and you might think that there's a bull trend underway, prices are increasing. And first thing we look for is a close that is above the upper Bollinger Band. This blue line is the upper Bollinger Band, and you can see here that we've closed above it. Then what we want to see the next bar is it opens and then it drops and it closes under, so back under that top Bollinger Band. And that's our signal to sell short. So what it's actually saying is it tried to push higher, but it couldn't. It closed back under, and we're going to go short. So we go short on the open, or the close of that bar, or the open of that bar. It's 99.9% of the time it's going to be immediate. Okay, because it's a 30-minute chart. Forex trades 24 hours a day. Once we're in the trade, we've either got our exit, which is going to be a stop loss. Now we're using a fixed 220 pip stop loss, or if you've sold short, then we're going to look to buy to cover. And same thing again. Market's moving downwards. We want to see a close beneath the lower band, and then a push up and a close just above that lower band, and then on the close of that bar or the opening of that bar, that's our signal to enter buy. If we're a short, then we're going to exit here and we're going to buy, or if we're flat on the market, then we're going to buy. Okay, so it's that simple. We'll have a look at it on the computer and I'll discuss and show you the improvement, because it's a massive improvement. I don't recommend you trade it without the improvement that I'm going to show you. And if I'm moving a little bit too fast, it's not too clear, don't worry. What I've done is I've laid it out rule step by step, and I've put it all into a PDF document so that you can go through that and read that. That's a free download. I'll leave the link in the description down below. This is the chart then. It's, as you can see, it's pound dollar on a 30-minute chart. I'll just show you the date range. We're going from the 1st of the 1st 2010 through to the 1st of November 2020. So as you can see, a bit like on my whiteboard, but better drawn. Here's the short sells. We've seen that break above the upper band, and it's closed back below the upper band, and we short sell. And same comes down. We see that break, that close below the lower band, and then a rally and a close above the lower band, and it's a buy. So you can see the blue buys and the red short sells. So at the moment we're always in the market unless we get stopped out. Let's have a look at the results for this, and then I'll show you the improvement. Look at the equity curve first, and it's not a very good equity curve, is it? It's certainly going in the right direction, but it's not great. You know, it had decent periods and then bad periods, so not really something I'd want to trade as is. If we look at the total trade analysis, you see here we've got an average trade of $21. That's really low. That means we've got an average trade of just sort of 2.1 pips, which we know, well, if you've seen in my videos before, we talk about trading costs. So for every trade, we're going to pay a little bit of a spread, sometimes commissions as well, and they're probably going to exceed that. So once we've taken trading costs out of that, this is going to be a money-losing strategy. But luckily, I've come up with a very simple improvement for you. So we'll look at that now. In this next workspace, this is exactly the same strategy, same chart, everything, but just with the improvement filter. And we look at the performance report. So notice now we've got an average trade size of $81. That's 4 times the size of that average trade. So much better quality trades. And equity curve, it's not the most amazing equity curve, but it's certainly decent, certainly tradable. Each one of these green dots represents new highs in the equity curve. So you can see right up until only a few weeks ago, or November 2020, which is what we're testing on, it was making money. So not bad. The next thing I think we'll do is I'm going to add some of those trading costs in so you can see what happens. But before we do that, guys, if you like this sort of video and you find this sort of strategy video useful, helpful, then please give it a like now, and if you haven't already, please subscribe to the channel as well. If we go back to that first workspace where we haven't got the improvement, and we'll add some trading costs into here, so I'll show you what I mean once we've added a bit in. First of all, I'll add what's equivalent to 3 pips worth of trading costs, so that'll actually be $30. Let's see what happens to the performance report, or the equity curve. And look what happens to the equity curve. Now we've added those trading costs in. Like I said before, money-losing strategy. We can look at the total trade analysis. We can see now we haven't got a $20 average trade. We've got a minus almost $10 because we've added in $30 worth of costs, quite simply. But let's add the costs in to the improved version. Now, let me tell you about the improvement while we're here. Quite simply, we can only look for buy trades, so we can only look to go long if the previous day was a white candle. That means that the close was higher than the open of the session or the day. And we're only looking for short sell signals if the previous day was a black candle. So the close was lower than the open. It's dead simple. So if today is Tuesday and we're looking to trade, then we need to see that on Monday we had a white candle so that we can go long. If it was a black candle, then we can't go long. Okay, it's that simple. But like I said earlier, I'll put all this in the report that you can download in the PDF, link in the description somewhere. So let's put some trading costs into the improved version, and we're putting the same 3 pips or $30, and that's what the equity curve looks like. Not too dissimilar to what it was before. So luckily the trading costs haven't affected it too much. Remember, we had an $80 average trade before. Now we've got an almost $50 because we've got those $30 of trading costs included. That's what we want to look for, guys. After we've included some trading costs, spreads, commissions, slippage, we still want to see an equity curve that is uptrending, that's pretty decent. And that's about it. A simple strategy using Bollinger Bands. I hope you liked that. I hope you found it helpful. If you've got any comments or questions, leave them down below, or you can email me, jared@thetransparenttrader.com. Go and visit the website. There's always good stuff over there. And until the next time, this is Jared Goodwin, and thank you.